All right, so hello my good friends, Doug here with the Lincolnlist.com, and this is Stock Market Mutterings. It will be for March 30th. Hope you guys are doing well. Month is almost over. Hope you have survived at least throughout this month. It's been a pretty good month for us. I'll post the link as always up on the screen if you guys want to start trading with us. But we'll talk about that here in just a second. As always, the motto here is, I'll take a grope in the murkiness. I'll try to make some sense out of the market the best I can. I'll try to provide you with a couple of great trading ideas. And I hope by the time the week is over, you made some money with that and it's improved your trading and your quality of life. So one of the things I wanted to start out with is after we've got this few day bounce here in the market, it's restoring some hope that maybe the worst is over. We had the employment number come out, and I guess maybe the market thought, hey, you know, the Fed's got money, Fed's going to take care of us, and it's not as bad as it sounds. Of course, it went from like 120K to 3 million. I mean, it was the biggest jump in history. So let's first address the issue is, are we now out of the bear market and into the bull market? And the answer to that question is no. And the great way to look at this, guys, is bull markets don't have volatility. What was the market like last year? What was the market like up until this coronavirus, right? It wasn't volatile. Bull markets are not volatile. As long as there's volatility like this, you are still in a bear market. Now, one of the things I always like to teach is speed. This is something that I don't hear a lot of other traders talking about often when they're teaching stuff or sharing things. Speed. Speed is a big deal in the market. And when you're dealing with speed up and speed down like you're getting here, that's not signs of a bull market. It's going to take some time to move through that volatility. And I think you're seeing that now, how there's hopes and dreams towards the end of the day, followed by just an absolute mass exodus on the way out. And it's going to be like this for a little while. It's not something, you know, when you go through a correction of this phase, it's not something that's just going to fix itself overnight at this point in the length of time that it has gone on. It's just not going to come back. Yes, we'll come back. Yes, we'll enter a bull market, but you still have a little bit more to go here. And I've talked about this before in the market mutterings. You can specifically go back to last week, and I'm not going to spend a lot of time on it, but I think the thing you're looking at here is we're not sure at this point the extent of the damage here. You know, when you're talking about shutting businesses down and they're going to go a couple of weeks or, you know, a month or whatever, that's hard to tell how bad that's going to hurt. It's not going to be good, I can tell you that, and it's hard to say if the market has priced that in. The other thing is you can see that the United States is now leading in coronavirus cases, and that's something there that with the testing that we have and the numbers, you can almost think that every few thousand more new cases is going to add another couple of days to a quarantine. So who knows what we're in store for. I hope you guys are safe. Now, let's take a look at both sides of that, because if you're intraday trading, this stuff is good. If you can get behind the right move and catch it, I mean, you get big trades here. And that's kind of like the strategy you have to have. If you're swing trading, overnight trading or something, it's a little bit tough here. You got a lot of overnight risk. You never know what's going to happen. But again, pay attention to that speed going forward. As it starts to slow down, the volatility starts to come out. That may hint the worst is over, but we're going to find out. So you got this big sell-off here. I'd just start looking at, you know, take a peek at futures on Sunday night here. See how they open up. See if they limit down, limit up. But right now you've got a little pivot to work with. You've got a high there from Thursday, which was like 262s, 263s up here, whatever this high is. I don't know the exact number, 262.19. Pay attention to that. If there's a way that this market can reclaim that and move past that during this week, then you might start to work on some of these upper areas right here. You've got some resistance sitting here at 271's a gap. And maybe if things really get hardcore, you got 289. So I would look at those. But first, before you can even consider that, you've got to get back up here at this 261, 262 area, which was Thursday's high, and pay attention to that as either resistance or a platform for a launch higher up. Now, going lower, you've got a few things here. I would just continue to pay attention to Thursday, because when we look a little bit closer on this upper chart, you pretty much gave back everything on Friday, and that's just nasty. And you got to go back here and you got to really start looking at these lows where this whole rally kind of got started on Thursday. So that's like 240s. So you're down here in the low 240s, about $10 away. The thing you'd want to see is this pivot low right here, 251s going into Sunday night, and obviously Monday. Just pay attention to this. If you gap below that and flush down, then I would think that 240 gets done. And you'd probably want it to hold up in between that 240 and this 233, which I think was like Tuesday's low or something like that. Otherwise, you're probably going to end up right on back down here at 220s, where the low was from the 23rd. And maybe that's what has to happen. Maybe the market has to back test and fill in some of this gap down here, in order to just build a solid foundation. So like I said in the past ones, it's not up to us to decide when it becomes a bear market and when it becomes a bull market. It's not up to us to pick tops and bottoms. We're just taking the data and the information that we have, and we're making choices off of that data and information. And what you have now, and this is what makes people successful in the trading world, is their ability to adapt. So the things that you were doing in January and February are not going to be the things you're doing today. You've got an extreme amount of volatility. You've got an enormous amount of headline risk. So everything has to be geared down. You have to be more patient and wait for your proper entry. You've got to wait for proper setups. Even if it means you're taking far less trades, which many of us are, it's better to have quality, The good side of that is with the volatility, you get it right, you are going to collect a large winner. You're going to get stocks that move $10, $12 or bounces that move $10 or $12. You're going to be exposed to money that you weren't exposed to prior. So that's the good part about it. You definitely have to control the position size as well, because your stops and everything are going to be a little wider because of the volatility. But that's the adjustments that you have to make. And if you do those and you're patient with it, things will work fine. And it also builds your character, because if you can trade through this stuff and you can successfully do it, that'll tell you that you can handle any type of market condition. And that's what makes you a man or a woman, right? That's what makes you a man or a woman. Okay, now let's talk about some stocks. I got a couple here that I think you can use as dual threats. We could either short these or long these, depending on how the market wants to open up. So I'll first start with Twillow. You've got a pretty solid bounce on this, 71 to 100, right? It's like Twillow only moves $30 a year, and now you got $30 in a week. You got a nice little rounding top formation. So if the market's weak and you're losing the lows, especially these lows from Friday, which is 95.40, I would look for a short, and I would look to collect that down in the 92s, which is the low from just a few days ago, into this gap and possibly even lower, depending if there's aggressive selling. On the other side, if you maintain a sideways pattern, you start working on these upper areas of 163s to 102s, then I would change that stance to long. Again, I think you need to look at the market for the clue, because these stocks are probably going to follow them in most cases. Same thing here with Win. Now, overall, I'm still pretty bearish on travel industry types of stocks. I think the damage is pretty done. I mean, pretty done doesn't sound very good, but I mean, you got to take this into consideration here. When I talk about we don't really know, Las Vegas has never been shut down. So all of the financial crises I've gone through, Las Vegas wasn't closed. People could at least go gamble away the last bit of their money that they had in sorrow. It's closed. It's like, how much revenue when the casinos are closed? I mean, it's going to be in the billions, guys. I mean, it's just untold. So, and we don't know. Again, more cases pop up, longer the quarantines go. You can do the math here, right? Anyway, same thing with Twillow. You've already broken the range here. This is quite a drop coming from Thursday. 83's down to 62. It's already 20 in the hole. I don't know how enthusiastic I would be shorting something like this, but let the market guide you. If you start working around 67, 68s, then maybe you've got a long there. Same way with DEC here. All these kind of look the same. Again, you could just trade the market straight out and put these stocks on hold. But DEC, just a lot like Twillow. Holding up here, you get underneath of the 128s. You get underneath of the lows here. I would look for more aggressive and more solid selling. Again, if the market is doing its business downwards, that's it. You get up here towards the 140s. then maybe we've got a chance to get to the 200 moving average, which is 160. And of course, NVIDIA, there's always a trade on NVIDIA. This thing has been a monster trade lately. You get on the right side of this thing. I mean, this is what I'm talking about. Look at these monstrous moves up, monstrous moves down, up and down. I mean, you've got everything that you need right here. You know, this is like, you know, the Costco's. Everything you need is in Costco. Everything you need is in it. I mean, Costco, the store, not the stock. Everything's in NVIDIA. Just right into, I mean, look at this thing, right into resistance, just a sweet chart. If you get, again, market's weak, more selling, breaking consistent support levels that were recently established, you could look for this thing to trade to 243s and maybe 227s. If you get a couple moves above these wicks right here, got a lot of resistance this week in that 262 space. You saw it right here, saw it right here. Then perhaps you've got a long. So anyway, guys, I'll leave it at that. I think still in this type of situation, the market's going to give you your clue. There'll be some individual stocks here that'll be strong, but the market's going to be your overall clue, because if you look at the market, 95% of all the stocks you look at are going to look identical to that. So keep that in mind. Trade well. Just be patient. Lower your size. Be patient. Try to get behind the right move. If you have to wait it out a little longer to let the market decide, then that's what you have to do. But again, I think we still don't know, and it is not a bull market yet because it's too volatile. The speed will be your clue. When that starts to slow down, then the bets can get bigger. But right now, you're going to be in this chop like this huge move back and forth for probably another month or so until we get more data out there and some nerves can get calm. So anyway, guys, thanks for watching the video. Take care. I will chat with everyone next week.